The team at Technology for Hotels knows how busy you are. So we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in. Welcome to the 5-Star Weekly Briefing, your pulse on the hospitality industry. This week's briefing is brought to you by VTech, the global leader in hospitality telecommunications, providing elegant antibacterial guest room phones designed for the modern hotel environment.
It is great to be back looking at another huge week of movements.
Yeah, we really do have a massive stack of developments to unpack for you today. I mean, we're looking at a landscape that is just shifting so rapidly right now. We've got multi-billion-dollar mega precincts, ultra-luxury debuts, and then right down at the operational level, the autonomous AI tech that's hitting the front desk.
Right. And our mission for this deep dive is to take all of those announcements, all those development pipelines, and extract exactly what you need to know from them.
Exactly, because it's not just a list of openings.
No, not at all. It's an incredibly fast-paced market. So for you listening to this, the goal today is to help you spot the patterns. We want to see where the smart money is moving and how guest experiences are being completely rewired from the ground up.
So let's start by looking at a property that perfectly encapsulates a really interesting new strategy. I've been tracking Capella Hotels and Resorts, and they just announced their expansion into North Asia with the Capella Kyoto.
Set for a March 2026 debut, right?
Yes, exactly. But what really caught my eye wasn't just the fact that it's a luxury property, it's the location. It's an 89-key property going right into this historic Miyagawacho Geisha district.
Which is a highly, highly protected, culturally iconic area.
Right, so how do they even build there without it feeling like a massive imposition?
Well, you have to look at who they're bringing to the table. They've got Kengo Kuma and Associates doing the design, which immediately signals a profound respect for the local architectural heritage. Plus, the project is being spearheaded by Clive Edwards, Capella's Senior VP of Operations.
And the culinary side is huge, too. They're teaming up with the 3 Michelin-starred Single Thread team for their signature restaurant, Sonoma.
Yeah, but to answer your question about how they integrate into such a protected district, they are employing what we call the ultra-luxurious cultural custodian model.
Cultural custodian, I like that.
No.
What does that actually look like on the ground?
It means they aren't just dropping a hotel into the neighborhood. Capella is actively restoring the local Kabarendra Theater. They're building a brand new community center as part of the actual precinct.
So they're literally funding the preservation of the district's living history.
Exactly. And for you as an industry professional, the big takeaway here is how this creates an entirely exclusive, high-yield experience. In the ultra-luxury tier, guests already expect the flawless service and the beautiful room. That's baseline.
So what are they paying the premium for?
Access. They are paying for authentic, curated cultural immersion that money alone usually can't buy. By restoring that theater, Capella elevates the property from just a place to stay to a vital patron of Kyoto itself.
That completely redefines the value proposition. You're basically paying for a key to the city's heritage.
Spot on.
But, shifting guest expectations aren't just an ultra-luxury thing. We are seeing a really fascinating ripple effect in the mid-scale sector too, specifically looking at what Spacious Group is doing down in Melbourne.
The new Mercure Melbourne, Trobe Street.
Yes, and they just officially opened. And the scale of this project is significant. It's a $90 million investment, 18 stories, 195 rooms.
Overseen by their new GM, Justin Phillips. And it's actually the largest purpose-built hotel to debut in the Melbourne CBD this year.
Which makes their aesthetic choices so interesting to me. When you hear purpose-built mid-scale, you don't necessarily picture a highly localized boutique design, but Life Architecture and Soar Interiors gave it this really cool tinsmith factory vibe.
Yeah, leaning heavily into the historical narrative of that specific neighborhood.
Right. And they built out these premium room configurations, like Suite 1603, that look incredibly high-end. Why invest so heavily in boutique-level storytelling for a mid-scale brand?
Because the mid-scale sector is aggressively shifting toward attainable luxury.
Attainable luxury.
Yeah, the baseline expectations of the modern traveler have just permanently gone up. They want that Instagram-worthy design, they want the localized story, but they want it at a mid-scale price point.
So by pushing that tinsmith factory narrative and having high-end suites, Mercure is sort of blurring the category lines.
Precisely. They are daring the guest to compare them to higher-tier boutiques, and they couple that with a highly strategic location. Being on the western CBD fringe puts them right next to Marvel Stadium and Southern Cross Station.
Perfect for capturing the high-volume events crowd.
Exactly, but giving that crowd an experience that feels way more bespoke than a standard transit hotel.
It makes total sense.
Yeah.
Okay, let's unpack this next one, because if we look at the global heavyweights, the brand chessboard is incredibly active right now. Minor Hotels is making a massive push.
Yeah, their Australian debut for the luxury Anantara brand.
The Anantara Perth Hotel. It's a 150-key new build, acting as the luxury anchor for the Burswood Point precinct. And the figure attached to this precinct is staggering $3.8 billion.
It is a sweeping development. Driven by Miners Group CEO Dilip Ratchakari and Golden Sadeyu, it's going to have a signature Anantara spa destination dining. But the big question people are asking is why Perth?
Yeah, I mean, Minor already has Oaks and Avani in Australia. Dropping their flagship luxury brand into a new build in Western Australia feels very specific.
It's a highly calculated read of the market. Perth is rapidly solidifying its place as a high-yield gateway for Southeast Asian investment.
So the resource economy provides the corporate baseline, but the international capital is demanding a higher tier of product.
You hit the nail on the head. This shows Minor moving decisively beyond their more accessible portfolios. They are stepping firmly into the ultra-luxury tier in a market that is just fundamentally ready for it.
Which brings up an interesting debate about how global brands enter maturing markets. Minor is doing a new build, but over in Queensland, Hilton is taking a completely different approach to establish their independent luxury brand, LXR.
The Gold Coast takeover.
Yes. They are taking over the iconic former Palazzo Versace, which is currently the Imperial Hotel.
Such a legendary piece of real estate.
Truly. The deal was driven by Hilton's Candace de Cruz and Islander Hotel Trading's Lee Soo. They're planning a massive refurbishment for the 200 rooms, aiming for an early 2027 reopening.
And they plan to keep that signature neoclassical architecture, right?
Right, but blending it with LXR's bespoke service model. But I have to ask, when a giant institutional brand swallows up an iconic independent asset like that, don't you risk losing the very magic that made it famous?
Well, that is the exact challenge the LXR brand was built to solve. This is textbook for what global operators are doing right now. They are targeting the discerning traveler in leisure markets.
Guests who want the localized flavor, but also the safety and points of a global network.
Exactly. So by replacing the legacy fashion branding with the LXR badge, Hilton maintains that independent spirit, but they inject it with their immense global distribution engine.
So the independent hotel gets the operational safety net.
And the major player gets a property with an irreplaceable pedigree. It's a win-win.
We're seeing another variation of that across the Tasman Sea, too. Marriott International has signed an agreement with PHC Queenstown Limited, the Pandy family, to bring St. Regis to New Zealand.
Driven by Marriott's Richard Crawford, it's a 145-room new build slated for late 2027.
With views of Lake Wakatipu and the Remarkables, the location sounds unbelievable.
It really is. And bringing the famous St. Regis butler service to the South Island sets a brand new operational benchmark. With 2 million annual visitors already, this firmly positions Queenstown on the global ultra-luxury map.
It raises the ceiling for the whole region. But, executing these billion-dollar precincts and ultra-luxury new builds, it requires serious market confidence. Are the economic fundamentals actually there to support this?
The latest data says yes. A new Colliers report highlights incredible momentum in the Australian hotel investment market. They are forecasting annual transaction volumes to break the $3 billion mark.
$3 billion. What is driving that much liquidity?
Yield and stability. Occupancy is stabilizing at a very healthy 72 to 78%. But the real story, the reason capital is flowing, is that revenue growth is being aggressively driven by average daily rate appreciation.
So operators are holding rate integrity. They aren't heavily discounting just to fill rooms.
Exactly. ADR is strong. If we connect this to the bigger picture, the industry is pivoting from the peak holiday demand spikes of the last few years into a much more steady corporate and MIC environment.
Meetings, incentives, conferences, and exhibitions.
Right. And that steady corporate base is exactly why Australia is being viewed as a safe haven for global capital right now.
But all of this capital means absolutely nothing if you don't have the right people to run the properties.
Human capital is always the bottleneck.
Let's do a rapid-fire roster update, because the leadership moves keeping this industry spinning right now are major. First up, Jamie Smith is the new general manager at the Motley Hotel.
And Eloise Green is taking on a general manager role at IHG Hotels and Resorts.
Moving to the group level, Christian Sykes is now the group general manager at Royal Hotels Group.
In the luxury space, Megan Johnston has been appointed Director of Rooms at Park Hyatt Melbourne.
We also have Franck Moreau starting as operations manager and officer in charge at Astoria Hotels and Resorts.
IHG is staying active, with Tony Hart stepping in as general manager for Hotel Indigo Adelaide Market.
And wrapping up the list, Faralod is starting a new position as general manager at Accor.
It's quite a list.
It really is. When you see that level of talent mobility across boutiques, major brands, and luxury funds, what does that tell you?
It reflects a highly dynamic, confident market. When operators are rolling out ultra-luxury products that demand flawless execution, proven leadership experience is at an absolute premium.
The talent war is real.
Very real. You need veteran leadership to actually deliver on the promises made by these physical assets.
But even with great leadership, frontline labor costs are a serious headwind. Which brings us to a fascinating tech development. Canary Technologies just launched their Hospitality AI Agent Studio.
Oh, this is a genuine paradigm shift.
Unveiled by their co-founder, S.J. Sawney. It's a platform that lets hoteliers build and deploy custom AI agents for the front desk, central reservations, and the concierge.
Using pre-built templates or customized to unique brand standards.
Right. But how is this agent studio fundamentally different from the digital chatbots we've had for years?
It's the leap from passive conversational AI to autonomous agentic AI. Legacy chatbots are passive. They check an FAQ and spit out an answer. What time does the pool open? 8 a.m.
Right. It's basically an interactive brochure.
Exactly. Canary's platform represents autonomous tools that actually execute complex workflows. An agentic AI doesn't just answer a question, it manages the stay. It processes a late checkout, verifies availability in the PMS, posts the ancillary fee, updates housekeeping, and confirms with the guest.
Without a human ever touching a keyboard. That's wild. And the economic argument must be huge, especially depending on your location.
Undeniable. If you're operating in the Pacific with some of the highest labor costs in the world, this is how you maintain high-touch personalized service without your headcount costs going through the roof.
Because it frees the human staff from the transactional friction.
Precisely. If the AI handles the complex background work, your human staff finally has the bandwidth to step out from behind the desk and actually engage with the guests.
It perfectly frames the strategic crossroads we are at right now.
It does. And this raises an important question for you to mull over. Today, we've looked at the rollout of autonomous, complex AI agents handling the guest journey, happening at the exact same time that ultra-luxury brands are bringing in the deeply human St. Regis Butler service. As these two extremes, hyper-efficiency through AI and hyper-personalization through human touch, accelerate, where exactly on that spectrum will your property choose to compete in the next 3 years?
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry. Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world. Until next time, stay well and stay ahead. See you next week. Thanks to VTech for keeping guests connected with reliable, high-performance in-room technology.